Right. So, for this particular class, we'll be looking at MAC 37, 61, as well as MAC 48, 61, which is the CTA class. Right. So, along the way, I'm going to unbundle the class because sometimes CTA has got things that the guys in undergrad don't have, or maybe the level is slightly different. However, the introduction is similar. Right. For the guys that are doing undergraduate class, you need to do a good job with your module, the 48, the 3761, right? Because when it comes to this module called MSc, when you get to the A level, to the CTA level, the level is not that different. So what you'll find is that when you get to CTA, maybe you may have one or two or three different things that are added on top. But by and large, the syllabuses are almost similar. So as long as you do a good job here at this level, you will have a good time when you do your CTA. Right. So it's very important that you give it a good try at this level. That is the CT1. It will give you good joy when you go to CTA. Right. So we all know that the modules are year modules, which means we are going to do these modules throughout the year. You will have your assessments, your test. I think there are about four tests, and then you have your exam at the end. So it's quite challenging, especially for those maybe who are doing the year modules for the first time. Right, because you have to go through the whole year studying, and you do a combined exam at the end, which is in October, November, thereabout. So it simple means that everything that you will have probably learned in your early in the year, you need to return and remember that, and be able to write an exam concerning that at the end of the year. Now, this is different from your semester modules because with your semester modules, you know that everything is compressed within a period of 3 months, right? You are intensive for that 3 month period and you prepare for the exam and you write. So it's easier to retain things. So here, what is key and most important is discipline. So you need to have discipline. You can't have a situation like you have when you are doing your semester modules where you are intensive only for a short period of time. You write the exam and you pass it. Now here you have to be intensive throughout the year because the things that you are going to learn at the beginning of the year, you will need them at the end of the year. And chances are that if you are not consistent with your study, you would have forgotten the stuff that you would have studied earlier in the year, but you need to write an exam concerning that. So discipline is key. My advice always to students is to have a program or a plan of study. Okay, that works, but it must be a consistent program of study. For example, I've done my CTA. When I was doing my CTA, I just made sure that every day before I go to work, I've got 2 hours of study that I have. So, which means if I'm leaving home at 7 in the morning, right, I must have created space for myself so that I study maybe around 4 in the morning. I wake up and I give myself 2 hours. So that's consistent study throughout the year. And I was very disciplined on that. I was not skipping any day. All right. Unless if something massive was happening, maybe there was a holiday and I knew I would catch up. But I had my 2 hours of study every day until the end. So you can imagine CTA, then you had five modules if you were doing CTA 2. Now you've got more, you've got other CD modules that they've added, but you'll be having five modules and you need to create space to cover those modules. So my advice to you before we start with our session, please come up with a program of study. You must study daily, even if it's 1 hour, 30 minutes, even if it's 1 hour at least every day. Create that. You can do that maybe say before you go to bed, you know that you have got an hour of study. Or if you are tired at night, when you wake up in the morning, create an additional maybe 1 hour, 30 minutes, I think is more decent. Right.
Hello.
You stick to that thoroughly throughout the year. And then what you do is if you study something, say at the beginning of the year,
Hey guys, Jeff.
right? Please mute
Coffee ka.
Please mute for me if you are having a conversation on the side. Thank you. Right. So I have that consistent, 1 hour, 30 minutes of study every day. If it can be more, even better. Right. What you do is if you studied something earlier in the year and you are continuing, you know that information you need to retain it. Once in a while, you must go back, take a question on something that you've already studied, practice it so that you don't forget. So if you keep like that, you make sure that when it comes to the pressure time at the end of the year, right, you haven't forgotten any stuff that you learned um, at the beginning of the year. So that's my advice to you. So those that are maybe repeating CTA will understand me very well. You need to have that consistent period of study. Everything comes crashing at the end there. So it's important to have that. Right, let's go now to the MAC module that you are doing. Right, how do you start the MAC? Okay, right, so I'm looking at studying MAC uh, so that you have a strategy of study. Right. So the first thing that you do is you must make sure that you understand your theory. Right. So you must make sure that you understand your theory. Right. Whatever you do in MAC is always underlined um, by your understanding of theory. If you don't understand the theory, the calculations will not make sense. So when you study, before you do anything, before you go to the calculations, right, go through to the theoretical background of each particular topic, right? Understand the basics, understand why you are doing something, understand the use of something. Now, when you go to the calculations, you will see that the calculations will be answering or will be talking to your understanding of theory. So if you have that disconnect between the theory, then the calculations will give you a problem as well. And also remember, at this level, we are dealing with application level. So it's unlike in your second level or level before that, when you were starting MAC there, right? What was happening? All your questions were calculations. So it would be required, calculate this, calculate that. Right. However, at this level, calculations are still important. Right, but it's not always about calculation. Remember, it's application. So therefore, at the end of the day, there will be a lot of theory questions that will be asked, right? Where you'll be asked to explain your calculations, where you'll be asked maybe to explain why certain calculations are being done, right? Where you'll be asked to show how you can improve on the calculations that you have. Remember, some calculations are basically an evaluation of performance. So sometimes you're asked to actually give remedies that can be put in place to improve performance. So all of that requires your understanding of theory. Without theory, you will probably be in serious trouble in the module. Right after you are done with your theory, right, practice questions are very important. Right. So remember, this is a MAC is like mathematics, right? Sorry, I'm just answering someone in the group who is asking me a question. Right. I think this person does not have a link. Sorry, allow me to send them a link. I don't know why they don't have a link. Right. MAC module. Right. Just 1 minute. All right. Right. Just like mathematics, if you understand something maybe for the first time, right? If you don't practice, you forget. Formulas are like that as well. If you don't practice them, you forget. MAC is similar. So you need to practice questions, right? I always say to students on each particular question, you must do at least 4 different questions, right? So my advice is that on each topic, right, cover at least, right, 4 different topics and know them back in and out. So this will help you uh, in making sure that you cover all angles, right? A question can be asked in many different ways and may require different things. So if you do one question, you get another question that looks completely different from the one that you did, but the topic is the same. So, but if you do 4, 5 questions per each particular topic, right, all the angles that they can ever ask you, you would have covered them. Nothing will surprise you in the exam. Right, so very important for people to understand what I'm giving you. Theory comes in first, understand your theory. And then after that, do a lot of practice questions. And then after that, be consistent. Don't leave a particular topic without practicing it for too long. Right, once in a while, go back, do a question, get 1 hour, 30 minutes, practice some stuff from behind. You will be very, very well prepared. Right, so for the classes here, I will probably offer 3 free trial sessions, starting with this one, 3 hours each. And then what we'll do is we'll meet once per week at the same time, use the same link all the time. You'll be able to find us here. Right. After that, then if you are interested in registering, you will talk to me, then I'll register you, and then we can continue together. Right. And then I'll probably, for the MAC module, I'll probably offer a class of 4 hours each. And then I will do 2 sessions, one on weekend and one midweek. That is after the free trial sessions. So, but the free trial sessions is one class per week. So, yeah, basically that's my introduction and my little advice on the module. So, let's start on the business of the day. Right. Remember, any questions, good people, any contributions? Right. Feel free to ask questions. I actually appreciate it if our recording has got a lot of questions because it does help you when you're studying on your own. All the relevant questions, if we are participating, will have been asked in the session, and it does help you when you are on your own with our recording. All right. So I'm going to start. Okay, let me check the chat there. Right. The session is being recorded. I will make a link available in the group for you. Probably later in the day today. So all my classes, I do record them and I make them available. Right. So uh, we are specifically looking at costing here today. Right. We are looking at the costing module. Right. In particular, I'm doing an introduction and I'm going to be looking at classifications of cost first. Right. So I'm going to be looking at the classification of costs. Right. When we talk about classification of cost with people, we are simply saying, how do we group cost together to provide meaningful information? Right. So the first classification of cost that we have, right, we have what is called, let me start with the, what we have, cost behavior. Right. So the first classification that we're going to have is that of cost behavior. Right. When we talk about cost behavior, we are simply saying, right, how does a cost, right? So we are simply answering the question, how does a cost respond, right, to changes in output? Right, how does a cost respond to changes in output? That is changes in units produced and sold. Right, how does a cost respond to changes in units produced and units sold? Right, so we have the following cost behaviors. Right, number one, or number A, we have what we call fixed costs. Right, so I know that you have done a MAC before. Right, what do we understand to be a fixed cost? Good people who can explain what is a fixed cost? Right, are we there? Right, let me continue. Right, so basically a fixed cost, we're saying the total of such a cost. Right, the total of such a cost, right, does not respond to changes in output. Right, does not respond to changes in output. Right, at all levels. Right, at all levels of output. Right, the cost in total remains constant. Right. However, there is another silent feature that we don't normally discuss, which is to say that, right, the cost per unit, right, the cost per unit of a fixed cost, right, reduces as output increases. Right, and increases, right, as output reduces. Right, so when we say this is a fixed cost, most of the time we are talking about the total of that particular cost. Right, the total of that particular cost is the one that remains constant. Right, so obviously within what we call the relevant range. Right, and then the cost per unit does change. Right, as long as the number of units are increasing, then the cost per unit will reduce. And when the number of units produced reduces, then the cost per unit will increase. So that's the behavior that we expect from a fixed cost. Right, let's give an example of such a cost. Right, let's say that we have a company. A, a company pays rent, right, of 100,000, right, per year. Right, so if the company, right, of 100,000 per year, right, if the company produces, right, let's say the company produces 10,000 units in a year, right, let me start with 1,000 and go to 10,000, right, and go to 50,000. So this is output per annum. Right, then we have the total cost. Right, our rental expenditure for the company is not being determined by the number of units produced. It is more likely determined by the square meters of space occupied. Remember, we are renting and we are charged for the amount of space that we are occupying. So for that particular space that we are currently occupying, we are being charged a total of 100,000 per annum. So it doesn't matter as long as we are still occupying the same size of space, right? We will be charged the same amount, which means the total cost, which is a fixed cost, will remain consistent at 100,000, regardless of changes in output. Right. However, it is important to note that the cost per unit will not remain constant. The cost per unit will change as output changes. Right. So if we have 1,000 units being produced, right, then we are saying what is the cost per unit? So we'll have to divide our 100,000, that will give us 100 by 1,000. So therefore, the cost per each of those units being produced will be 100 Rand. Right, if we then improve our production, right, now we're able to produce 10,000 items it means our cost per unit now becomes 10 Rand. Right, if we improve our production further and increase it to 50,000, then we're saying our cost per unit would be 2 Rand. Right, so we can clearly see that the relationship in terms of the cost per unit is that, right, as output increases, which is what we are having here, right, then we are saying the cost per unit is decreasing. Right, the reverse is also true. If we were to increase or to decrease output, then the cost per unit will also what? Decrease. So a cost that behaves in this manner will be what we call a fixed cost. And we can clearly see that per each unit that we produce, we make more money if we produce more, in as far as the fixed costs are concerned. The reason for that is as we produce more units, we are then spreading the cost, which is the fixed cost total of 100,000, over more units, which means that our product per unit, hoping that all the other costs, that is the variable cost, are consistent, then our product will become cheaper as we produce more. If we produce less, then we are spreading the fixed cost over a fewer number of units, and then our fixed cost per unit will actually be what? Will be higher, and therefore make our production to be expensive if the variable costs are what? Are consistent, if there is no change in the variable cost. So this is the behavior of a fixed cost. And let's be reminded also that a fixed cost is usually fixed within the relevant range. Let me explain that. Right, a fixed cost, right, is fixed within the relevant range. Right, what is the relevant range, good people? Right, when we talk about the relevant range, right, this is the usual, right, this is the usual level of operation, right, by the entity, right, such that, right, cost behavior, right, is predictable and consistent. Right, predictable and consistent. Right, so when we talk about the relevant range, let's say an entity has got a production capacity of 100,000 units. Right, so they have operated within the 100,000 units, which means from 0 up to 100,000. So they have been operating within that particular range for a period of time. So over time, they began to notice the behaviors of cost within that particular range. Right. However, if the company wants to break over and above the 100,000, right, they do not know what is going to happen to cost over and above 100,000 because they've never operated within that particular space. So anything over and above 100,000 is outside the scope of the relevant range. So Tina, as an entity, we can only predict cost behavior within the relevant range, which is the range that we have operated in before. Right. For example, if we have the fixed cost here, right, let's say that we are occupying 10,000 square meters of space. And within that 10,000 square meters of space, we have fitted our machinery so that we are able to produce a maximum capacity of 100,000 units. Right, if the entity now wants to produce 150,000 units, unfortunately, we will have to bring in additional machinery, right? Additional machinery which will require additional space. So therefore, we are saying maybe where we are currently renting, right, we've already exhausted the space and we need to look elsewhere. And we are not sure about the cost in the place that we are going to rent if we want to expand and get an additional what? 50,000. So we do not know the cost behavior over and above the 100,000 that we are currently what producing. So always when you explain these things, you must always explain that a fixed cost is a fixed cost that remains constant regardless of changes in output within the relevant range. So don't forget to mention that within the relevant range. Right, so I would imagine that is very easy to understand. Any question, good people, on the fixed cost classification? Right, are we clear? Right, are we still there? Eh, Right,
Yes, yep.
wonderful, wonderful. Remember, we want to interact and make sure that as we do our class, we interact and it's going to be valid when you get the recording, especially when you're asking questions. Feel free to ask questions. Right, let's go to another cost, which is called a variable cost. Right, so when we talk about a variable cost, right, this particular cost, the total of such a cost, right, the total of such a cost remains, sorry, right, changes in direct proportion, right, the total of such a cost changes in direct proportion, right, to changes in output. So the higher the output, the higher the cost. Right, the higher the output, right, the higher the total cost. Right, and the opposite is true. So which means the lower the output, the lower the total what cost as well. Right, however, we should be very clear, right, the cost per unit of a variable cost, which is the cost of one unit, remains constant. Right, remains constant, right, as output changes. So what we are talking about when we say variable cost, when we say fixed cost, usually we're talking about the totals, but you should be very clear on what is happening also on the cost per unit so that you have proper understanding. Right, let's look at an example here of such a cost. Right, let's say a company has got the following output, right, in units, right, 1,000 units, 10,000 units, 50,000 units. Right, let's say we are dealing with cost of direct material. Right, let's say a unit requires, right, 1 kg, right, 1 unit of a product requires 1 kg, right, at rand 10 per unit or per kg. Right, so which means therefore when you look at the cost per unit, right, in rand, right, it doesn't matter how many units you are producing as a company, right, but we are very clear to produce 1 unit, it is going to cost 10 rand. Right, we are going to need 1 kg and 1 kg is going to require 10 rand. So we're going to have 10 here. Right, so at all levels of production, the material required will be costing us 10 rand. Right, but when we look at the total costs, now the total cost that we are going to incur at any given level of production is going to be dependent on two things. right? One, the output that we are producing. Number two, the cost of producing 1 unit. So that therefore, if we are now producing 1,000 units, right, we are going to need 10,000 here. If we are now producing 10,000 units, we're going to need 100,000 rands to buy the material. If we are now producing 50,000 units, it's 50,000 units that we are producing, and each unit requires 10 rand, which means we are going to have 500,000 rand on hand to be able to purchase enough material to produce the 50,000 units. So it's very clear, right? The cost per unit remains constant. However, the total costs now change in direct proportion to changes in output. At each and every level of output, there is a different what? A total cost that is going to be incurred. And the higher the output, the higher the costs that are going to be incurred. So that's an example of what we call a variable cost. Right. And then we also have what is called a mixed costs. Right. Or semi-variable costs. Right. So when it comes to this particular classification, right, this is what we are saying. Right. The total of such a cost. Right. The total of such a costs, right, is made up, right, of total fixed costs, right, plus total variable cost combined. So this is a combination, right? So this is a combination of fixed cost and a variable cost, right? Let's give an example of such a cost, right? If you happen to have, say, for example, right, what example can you give of a semi-variable cost, right? A contract, a cell phone line. Right. Normally, when we have a contract cell phone line, there's always a fixed amount that you pay. Right. This one is not connected to calling. So you'll find that when you have a contract cell phone line, there will always be a small amount, maybe 50 rand or maybe 20 rand. That is always there and that is fixed on the contract. You don't have to make any calls. Even if you don't make any call, you'll be charged that amount. Right. And then you have the variable element. This one depends on minutes called. So the more time that you call, the variable cost will increase. The less time on the calls, the variable cost will reduce. But we are saying at the end of the day, you will then have a total bill that is a mixture of the fixed amount, which is usually a small amount, right, and the variable element, which is dependent to output. In this particular instance, since it's a cell phone, the output will be measured in the minutes on the call. So this is what we call a semi-variable costs. So very important to understand your cost classifications and your definitions of what a fixed cost is, how it responds, variable costs, and also how it responds, and what a mixed cost is. Right. More importantly, we must understand that some calculations that we do in management accounting require that costs strictly be separated between variable cost and fixed cost, which means now we then have a challenge if we have a mixed cost because it's a combination of both a variable cost and a fixed cost. And therefore, the total is a combination of such two costs. But in some calculations that we do in management accounting, for example, if we are trying to do an income statement based on variable costing or marginal costing, right, we will need to separate the fixed cost from the variable cost. Or if we want to do cost profit volume analysis, the calculation of break even and similar calculations, it is important that we are able to actually unbundle a mixed cost and be able to say the variable cost is so much and the fixed cost is so much. So let's look at methods, right, of separating, right, a mixed cost. Right, there are three methods that we normally use. Right, number one, we have what we call the high-low method. So remember, these are methods to split a mixed costs into on one side variable, on the other side fixed. Then we have got the scatter diagram. Right, then we've got a simple regression analysis. Right, what I will do or what I will cover in this session is the ILO method. Now, this particular method is very important. Normally, when you write a paper, you always have something to do with the ILO method. It's almost always present. Maybe 80, 70% of exams carry a calculation that requires the ILO method. So it's very, very important to make sure that you understand it and you know when to apply it. Right, the scatter diagram is a method that can be used, but they will never ask you that in the exam. You need to have a graph paper, you need to draw some things, it's trial by error, it takes forever to compile. So they will never ask you that. You can practice it from interest sake, you can check it out in your textbook. Right, the simple regression analysis, if you are doing CTA level, they will never ask you that again. It's too long, it takes time to compile. Right, however, if you are doing MAC 37, right, only for the guys doing MAC 3761. Right, your first assignment will carry a calculation on a simple regression analysis. Right, there will be, it's actually a multiple choice question most of the time, and they will have one or two calculations there. So in your first assessment, you probably do simple regression analysis. Right, however, that one, I think what I'll do is I'll upload something on my YouTube channel. You can check that out. You only deal with it in an assignment style question. Chances are you may or may not get it. So you check it out on YouTube. So what I will do, what is important here is the ILO method. So let's look at that. Right, good people. I know this is basically just a review of what you have done before. The ILO method is actually elementary to any MAC module, including first year and second year. Right, what is the formula for the ILO method? Who can remember that? Right, good people. Right, what is our formula for the ILO method? Right, the formula for the ILO method is very simple. Right, you look at the highest minus the lowest, right, cost, right, and then you divide that, right, by the highest minus lowest activity. Right, activity here is as good as quantity or output. So this is the formula that you use, and the answer that you are going to get there, right, will be your variable cost per unit. Right, that will be your variable cost per unit. Right, let me check the group chat. There's something for us there. Right, so that's the formula, correct. Thank you very much. Right, so I want us to look at a question specifically for the high-low method here. Right, so this is the question that we have, and this is what it says. Right, the following information was obtained from the books of Siberian Limited for the 6 months ended 31 December 20x8. So we have the month and then the number of units manufactured per each month there, right? And then the total overhead costs. Then it says using the high-low method, calculate the variable cost per unit and the fixed cost in total. Right, so what we are saying, we have been given a range of data, right, for the 6 months from July to December. We have the number of units, right, that were manufactured in each of those months, and then we have the total cost. Now, this total cost is a mixed cost. So what we need to do, we need to determine the variable cost per unit and also the fixed costs. Right, that's a simple calculation. So basically, we just, let's put our formula. Right. So it's highest minus lowest costs, right, divided by the highest minus lowest activity. If you can't remember the high-low method, good people, you will not make it in this module. It's the simplest and the most basic calculation that you do. And fortunately, it is very, very popular. So you need to retain the formula. Remember, there is only one formula or only one method of retaining formula. It's constant practice. And then these things will come natural to you. Right, so we need to go back and say, in terms of the costs, right, which is the highest cost that we have? So we can see here there is 423, right? There is 423, which is the highest cost that we have, right? And then we go to the lowest cost that we have. So the lowest cost that we have here will be what? 183. So therefore, we'll take 423, right, which is our highest cost there. So 423 minus 183. Right, then we divide that by the output. So at the highest cost, the output is 34,000. So we have our 34,000 here. Right, at the lowest, it was 14,000. And then we can get the variable cost per unit. Right, so if we do that calculation, let's see what we get. Right. Right, I'll explain that one just now. Right, so the denominator, that's 20,000. So we say 423,000 minus 183,000 divided by 20,000. We are going to have 12 rand per unit. Right, so what you must do when you do the idle method, you must be guided by the highest cost. So the highest cost here is 423. Right, so you take that minus the lowest cost. Right, sorry, minus the lowest cost, yes. And then in terms of output, you must now match. If you have taken 423, you must make sure that you take 34,000 minus 14,000. And now we then have a situation here where we have December. December is, in terms of outputs, gives you the highest output. Right. However, when we do this calculation, we are looking at predictive behavior. So here we can see that this here is out of line. Something is definitely wrong here, right? Because you would expect that the highest output will then give you the highest costs. which is not the case here because the highest output here is giving you only 383. So what you then do is you discard this particular, range, right? Because it is not giving you predictable behavior. And then you use the other information that is there. So in simple terms, be guided by the highest cost. Then that highest cost you match with the highest what? With its own activity there. The lowest cost with its own activity there. Right. I hope we are on the same page on that one. Right. So what you get here, that's your variable cost per unit. So that's your variable cost per each unit. Right. If you want the total costs at any level, so if you want the total cost at 34,000 units, then you will simply say 34,000 units multiplied by 12. You'll get the total variable cost. If you want the total variable cost at 10,000 units, then you say 12,000 multiplied by what? By 10,000 units. Then you get the total of the variable cost at 10,000 units of production. Right, the question requires us to determine the variable cost per unit, which is number one. We've answered that. And then the second requirement requires you to be able to determine the fixed cost in total. Right, so when we look now for the total fixed costs, we have to use the cost function. Right, so we have a formula called the cost function, which says y is equals to px plus a. Right, where y represents your total fixed or your total costs, both variable and fixed. So this is both your variable and your fixed costs. Right, your B always represents variable cost per unit. We already have that, which is the 12. Right, X always represents output, right, or activity level. Right, then A is what we are looking for, which is the total fixed costs. Right, so this is the formula that you then use to determine the total fixed costs. So what you do, you go back to your calculation of the high-low method. Right, you can choose to either use the highest or you can choose to use the smallest. The answer will come out the same. So I'll choose the smallest. So we are saying that the total combined cost at 14,000 units of production is 183,000 units. Sorry, 183,000 rands. So therefore, remember our formula is y is equals to bx plus a. 183,000 is the total combined cost. 12 rand is the variable cost per unit, which is that. Right, X is the output. And we are saying at a cost level of 183,000, the output will be 14,000 units. So therefore, we multiply by 14,000 here. Right, all of that plus A. We don't have A, we are looking for A. So we need to make A the subject of the formula. Right, so 183,000 here is equals to 14,000 by 12, right, which gives me 168,000 plus A. To make A the subject of the formula, 168,000 jumps the equal sign. It was positive, it becomes negative. 168,000 is equals to A. And therefore, A is equals to 183 minus 168, which is going to give me 15,000. Right, so therefore we have 15,000 rand, right, which represents the total of the fixed costs. So this is how you are able to determine your fixed cost within a high-low method calculation. Any questions on that, good people? Are we on the same page? Right, are we there, good people? Are we understanding it?
Yes, sir.
All right, so
Yes, yeah.
wonderful, wonderful. So that's how you calculate this. Remember, it's easy to calculate now because it's a straightforward calculation that I've given you. It's not application. In normal questions, when you are practicing, maybe for the exam and what have you, when you use past papers, you know that you get a long question combining different topics and it may be difficult to get the information. But as long as you understand the basics, then you won't have a big problem at all in terms of what? Of the calculation. Right? Sometimes they may then say to you, assume in, let's see the number of months that we have. Let's say they say assume in January, right? The output is, let me see here, what did I have? Right, let's say the output is 40,000 units. Right, what is the expected? Right, total costs. Right, remember we have the cost function which says y is equal to bx plus a. This time what we're looking for is the y, which is the total cost. Right, however, we already know that variable cost per unit is 12 rand, and the variable cost per unit does not what? Change. It always remains the same. That is the variable cost per unit. What changes in direct proportion to changes is the total. So we'll still have 12 rand per unit, which is the variable cost element. Right, then we'll multiply that this time by the number of units produced, which is 40,000. Right, so that we get the total, which always changes according to the output. Then the fixed cost total, which we calculated here. Remember, the total of the fixed cost does not respond to changes in output. It remains constant, assuming that we are still within the relevant range, which means we have 15,000 here. So that therefore, in total, we are going to be having the 40,000, right, multiplied by 12 plus 15,000, which will give you a total of 495,000. So this ILO method can also be used to predict the total cost at certain output levels in the future or now. So therefore, we are saying that this is what we expect to incur in total if we have a production of 40,000 and the cost have not changed and we are still within the relevant range. Right, that's your high-low method. Very important. Calculation will always be there in most exams. Any questions, good people, from the floor? Are we clear? Right, remember, we are still looking at what we call cost behavior. So what we have done is to look at one angle of cost behavior. There are three ways to look at cost behavior, classification of costs. Right, classification number one is cost behavior. So next we are going to look at classification of cost by nature of the cost. Right, so this is classification number two, classification of cost by the nature of the cost. Right, so when we classify cost according to the nature, right, we identify, right, a costs by the division, right, where it is incurred. Right. So what happens is that where it is incurred in the organogram, right, in the organizational structure of the entity. Right. So we then say for this classification, right, for this classification, we assume a manufacturing organization, right? We assume a manufacturing organization, right, arranged in divisions, right, as our default structure, right? Our default structure, right, will be as follows, right? So obviously, when you have an organization that is arranged in divisions, you will have the head office, right? Then we have the manufacturing division, right? Also known as the factory, also known as the production division. So these names are interchangeable. So manufacturing, factory, and production division talks about the same thing. Then we have administration, right? Division, right? Then we have sales and distribution division. Right, so you will find that according to our default, this is how an organization should be arranged if it's a manufacturing concern. Right. However, it doesn't mean that in practice this is going to be followed to the latter. Organization will arrange their divisions according to how best the structure serves them. So you may find a structure that is different from this one in practice, right? But for the purpose of learning, this is our default structure, right? So when we talk about costs according to the nature of a cost, we look at a particular cost and then we say in which particular division was a particular cost incurred. So this is a costing by the nature of cost. Where exactly in the organizational structure is a cost incurred? Now, what will then happen is that the name of a cost is going to be derived by where it came from within the organizational structure. So we are going to group cost according to the division where they are incurred. So here we are going to get what we call manufacturing costs. So all costs incurred here, we'll call them manufacturing costs, right? All costs incurred here will be known as admin costs, right? And these will be known as selling and distribution costs. So you then have now costs that are grouped together according to where they come from in the organizational structure. So this will be your organizational structure, and the cost that this will give you is a manufacturing cost, an admin cost, and a sales and distribution cost. Right, we then have examples here. Right, what examples of costs will we expect to be classified as manufacturing costs? Now, remember, we are very clear. A manufacturing cost is a cost that is incurred in the production division or manufacturing division of an entity. But what examples can we give? Right, come on now, good people. This is not new. Right, which cost can we give good people? Right, we can have direct material. Right, we can have direct labor. Right, let's see what we have on the chart. Right, so direct labor, and then we have, okay, thank you. Right, then we have variable manufacturing, right, overheads. Right, then we have fixed manufacturing overheads. Right, so these are the costs that we associate with the manufacturing environment. So obviously, if you are manufacturing, there must be an input of material. So we have what we call direct material. I will explain it later. We have also what we call direct labor. There is someone who is working in that particular environment. Even if they are machines, there is usually a little bit of human intervention. Right, then we have variable manufacturing overheads. And then we have fixed manufacturing overheads. Right, the term overhead here, any cost that is not direct, that is to say, it is not direct material, it is not direct labor, it's called an overhead in management accounting. So any cost that is not direct material or direct labor, then it is an overhead. Overhead can be variable, which means they change in direct proportion to output in total, or they can be fixed, which means the total cost does not respond to changes in output. Right, at many expenses or at many costs, what examples can we give? Right, we can have at many rent, right? At many office expenses, they could include rent, telephones, etc. We can have accounting staff, right? Salaries, etc. Right. Then we have examples of sales and distribution. Now, sales and distribution is concerned with delivering the product to the customer. So we have advertising, right? We have transportation, carriage outwards, right? etc. So these are some of the example expenses that we have. Right. So we have certain terminologies that we use uh, when we classify cost according to nature. So let me just write common terminology. Right. When costs are classified by nature. Right. When you classify your cost by nature, there are certain terminologies that we normally associate with this. Right. Please remember, theory informs your calculations. All this information is very important. You'll borrow from it when you go to serious stuff. Right. So when we look at the manufacturing, right, costs, right, if you add direct material, right, plus direct labor, you get what is called prime costs. Right. If you then add the direct material plus variable manufacturing costs plus fixed manufacturing costs, you get what is called um, conversion costs. Right. If you add everything, if you add the direct material, direct labor, and the overheads, then you get your total manufacturing cost, which is basically just a combination of all these things that you have here. You will then have your total manufacturing costs. Right. But you must always remember these terms. There are certain calculations, for example, process costing, where you would have to deal specifically with conversion cost. So you will need to know which cost to take. So you need to always remember these particular terms. Right. And then when we take, we also have another term, which is what we call a periodic cost. Right. When we talk about periodic costs, these are non-manufacturing costs. Right. These are non-manufacturing costs. So these are costs incurred outside the manufacturing division. Right. So normally we are talking about admin, right, and selling costs. So this is what we call periodic cost by default. If we are using what is called absorption costing, I'll be explaining absorption costing now. So if we are using absorption costing, then by default, we are saying the administration and the selling cost will be what is known as periodic cost. So in broad terms, we separate our cost into what we call manufacturing cost and what we call periodic costs. Now, the manufacturing cost is a very simple thing. These are incurred in production. And then anything else that is not incurred in production will then be known as a product cost. What is the importance of separating these two costs? Right, let's explain that. Right, when calculating cost per unit, right, we use manufacturing costs only. So very simple put, when you are calculating the cost of a product, the cost of manufacturing something, you only include the manufacturing cost. You don't include the periodic costs. So we're saying periodic costs are not part and parcel of a product's costs. Whenever you cost a product, you only use the manufacturing costs. You don't include any periodic costs. So that is the most important reason why we separate these costs. So it simply means when you calculate the value of inventory, opening inventory, closing inventory, you only include manufacturing costs. When you are in your income statement where you say calculate cost of sales, you normally say opening inventory plus purchases. But for a manufacturing company, you don't purchase, you manufacture. So you say opening inventory plus manufacturing costs. So you only include manufacturing costs, which are the costs incurred in production as part of that manufacturing cost. Right, the periodic cost here, right, periodic costs are written off, right, against gross profit. Right, angithi manufacturing costs. When you are in your income statement, you say opening inventory plus manufacturing cost less closing inventory, you get cost of sales. So therefore, the manufacturing costs are included in cost of sales and therefore gross profit. So when you calculate gross profit, you'll be affected by manufacturing costs. because they are included in your calculation of cost of sales. But the periodic cost must never see or must never be included before gross profit calculation. They are actually written off after you have calculated gross profit. So very, very important that you are able to explain that. So this is classification of cost according to the nature of the cost. Any questions with people from the floor? Right, are we clear? Right, are we there? Right, you are very quiet. A management accounting class must not be quiet. Right, let's continue. Right, it's still easy now. I know you have questions for me when we do the hard stuff. Let's look at classification according to direct costs. Right, direct and indirect costs. So this is another classification that we have. Cost can be subdivided into direct costs and indirect costs. All right, let's look at what we call direct costs. Right, what happened to my pen here? Need black. Let's give me that. Okay, just 1 minute. Right, so we want to look first at the direct costs. Right, good people, from your prior learning, what do you understand by the term direct costs? Right, let's go. Now, this is a cost that is directly attributable, right, to a particular product, right, and is therefore, right, easily traceable, right, on the product. Right, when you talk about traceability here, when we say traceable, right, we're saying we can calculate, we can easily and accurately calculate, right, the cost per unit. So if we want to find out a particular cost, we want to know how much it costs to produce 1 unit. If we can easily and accurately determine that, right, then we are probably dealing with a direct cost. Remember, it is a cost which is directly attributable to a particular product. When we say it is directly attributable here, let me explain that. Right, when we say directly attributable, we are simply saying it was incurred for only a particular product. Right, in other words, without that particular product, we will not have such a cost. Right, so for example, let's say, right, we have a factory and we produce, please mute, thank you, only one product. Right, so we have a factory, that particular factory, we only produce one product. Right, let's say we've got a rent expense. Right,
Hello.
right, let's mute if we're having a conversation.
Hello.
to comment here and mute me after. So a factory.
Nil kamu kereke. Inyani kereke yo.
Yo, too much. Yo, official.
Listen. All right, I think it's sorted. Right, we have a factory and we produce only one product. Our rent expense is 100,000 per annum. That's our rent for the year. Right, if we then produce 50,000 units, when we now want to cost and we want to determine the cost of rent per each unit produced, that should be the easiest thing. We just say, what is the total rent expense, right, divided by total output. Right, then we say 100,000 was the total rent for the year, and we produced 50,000 units. Right, so we are very clear in this situation that we have got 2 rand per unit. So per each unit that we produce, we can accurately determine that it actually costs 2 rand to produce that unit. Now, this is simple and easy to calculate because the total amount of rental that we have, which is 100,000, right, was actually incurred specifically, directly attributable to this product that we produce. So therefore, rent in this instance is actually a direct cost. So any cost that is incurred because of a specific or a particular product, or it is incurred, all of it for a particular product, and then that cost will be a direct cost. So note here that the rent is a fixed cost. This here is a fixed cost. Most of the time, fixed costs tend to be a indirect costs. However, if the cost is incurred specifically for one particular product, then that particular cost will be a direct cost because we can easily trace it accurately to a single product being produced and state with accuracy how much the cost per unit is. Now, if I take the same factory, right, same factory, right, but we produce, right, 3 products there and house, admin, and sales offices. Right, in this instance, we are saying our rent is still the same amount of 100,000, but we have got a small problem in this instance. Right, the rent amount is not specific to a product. Right, the rent amount is not specific to a particular product. Right, the rent amount is a shared cost. Right, the rent amount is a shared cost, right, between 3 products and a periodic cost, which is the administration and the selling and distribution. Now we are saying it is therefore difficult to allocate this cost to a single product. Right, we'll have to split this between product 1, product 2, product 3, admin, right, and sales. Now, because of that, it is impossible to accurately calculate cost per unit To split the 100,000 between those four variables that we have to use estimation. Whenever you involve estimation in determining cost per unit, then this is an indirect cost. We are not able to accurately determine the cost per unit on the final product being produced. So therefore, in this instance, it means we will be dealing with an indirect cost. Now, remember, this is the same cost. It's still rent. In the previous instance, we're dealing with rent. We're still dealing with rent. It's still 100,000. It is still a fixed cost in both instances, right? However, the fact in that in instance number one, we were only having one product to produce, and it was being produced in an exclusively factory environment. It means the admin have got their own offices elsewhere where they don't share the rental expense. This rental expense of 100,000 is isolated to the factory, and there is one product being produced there. So all we have to do is say, what is the total rental expense for the year? How many units did we produce? And then we split equally between the products. And that is an acceptable, accurate cost per unit. We don't have that with example number two. So therefore, example number two now will represent a what? An indirect cost. Right, let us note that all variable costs are by default, right, direct costs, right, unless stated otherwise. So by default, we are saying variable costs, which is basically direct material, direct labor, and variable manufacturing overhead costs. Right, those are direct costs. Right, unless if the question tells you otherwise. A fixed cost can be direct, can be indirect. It depends on whether you can trace the cost directly to the final product. So if I'm giving you a breakdown of examples here, right, of direct costs, right, I will then have direct material, I'll have direct labor. Right, let me explain this cost as I'm giving them to you. Right, so we have direct material. Right, so when we talk about direct material, this is material, right, used to produce a product. Right, material is usually variable. So it's usually direct. Right, so normally when material has been used to produce a product, it tends to be a direct cost. Right, let's note that material is only indirect. Material is only, right, indirect, right, if the costs of such material, right, is negligible, right, compared with the cost of the total product. Right, for example, let's say you are producing a textbook. right? And then you have glue, right, used in a textbook. Right, so you may find that maybe the textbook cost you 100 rand to produce, but the glue that you used in that textbook maybe cost you 0.002 rand to produce. Remember, when you are going to produce a textbook and you are going to use glue, you are probably going to buy glue in a drum. But to fasten a textbook, you only need a few swabs of what? Of glue. So the drum of glue may have cost you maybe say roughly, let's say it cost you a drum of glue, let's say it cost you, I don't know how much it cost, let's say it cost you 1,000 rand. But you are going to fasten 10,000 books with that particular glue. So if you divide here, say 1,000 divided by 10,000, you are going to find that, or let's say you're going to fasten 100,000, you are going to get 0.001. So this is probably how much it's going to cost you to put a swap of glue at the back of the book where you're going to fasten with the covering. Now remember, the book is costing 200 rand for all other costs to produce except the glue. So we are saying that the price of the glue is therefore almost negligible when you look at the cost of the other material used to produce the glue. So you don't want to have a costing. Let's say, for example, you round off your costings to 2 decimal places. If you have this now, when you round off to 2 decimal places, your costing are going to work out to 200 rand. You won't have glue in that costing. Right, to overcome that, because you need to recover all your cost of production, including the glue. Normally, we just say 2001. Sorry. We will say maybe the cost of production is 201. So basically, we estimate a reasonable amount for the glue. That will make sense when you add with the total cost. In other instances, when you produce big things and you've got a small component that you introduce there, it may cost 0.000005. Yet the actual product is costing maybe 200,000 rand. That 0.000 something does not make sense in overall production, especially when you round off figures. So you don't want to leave it out. What you do is you estimate a reasonable amount, you round it off, in other words. But when you are now rounding off, it means when you look at that cost here, the cost of glue is no longer accurate. It is an estimation. And wherever there is estimation, then you are dealing with what? With an indirect cost. So that is the only time when material is actually an indirect cost. It is when the cost of that material vis-a-vis the overall product cost, it is too negligible. Then it will then be classified as an indirect cost. Right, we also have what we call direct labor. We also have direct labor. This is the cost of employees as labor who are directly involved in production. Right, who are directly involved in production. Right, such employees, for example, if I'm running a furniture shop, would be the ones that do the carpentry, the painting, and other things, but they are there in the line of production. So we call them direct labor. Right, NP, cost of employees, right, found in the factory, but not directly involved in production. Right, but not directly involved in production, will be classified as indirect labor. Right, what examples of employees that will be found within a manufacturing environment who are, however, not involved directly with production, can you give me? Right, they are there in the factory, but they don't hold the machines. They don't do the actual manufacturing. Right, we may have supervisors, factory manager, right, cleaners, right. We may also have maintenance staff, right, etc. So these people are there in production supporting what? Production, but they are not directly involved in production. So we call them indirect labor. Right, then finally, we then have manufacturing overheads. So remember, I'm giving you examples of direct cost, and I've also given you indirect cost. Right, so we can have manufacturing overheads. Now, manufacturing overheads can be direct or indirect. So whenever we deal with manufacturing overheads, remember these can be direct or indirect, or they can be fixed or variable. Right, so we then have manufacturing overheads, right, both variable, right, and fixed. Right, fixed can be your rent, supervisor salary, production manager salary if these are not linked to the number of units produced. So it means these people are actually earning fixed salaries, right? And then you've got your variable overhead cost. For example, if you've got a telephone line in your production for calling, then we are saying that the cost of calling there will be determined by the number of units produced, or you've got electricity, which is consumed according to how long the machines are running. So that's a variable element. All right. So when you start your management accounting journey with people, or when you want to refresh it, like what you are doing, you're not starting from fresh, you are refreshing. Right. You must always start with the classification of cost and make sure that you are on top of everything to do with classification. This here is your theoretical background when it comes to management accounting, especially the costing part. If you probably have a challenge with any of these things that we've discussed, you will have problems elsewhere in the module. So this is your starting point. You must always make sure that you are very clear on this. So that's our first topic for the day, which is classification of cost. Any questions from the floor, good people? Right, next we are going to be looking at a topic, direct and indirect costing. Right, direct and indirect costing. Right, this is an important topic. You can never write a costing exam without an element of direct and indirect costing. It's impossible. It's impossible. I would say, besides the theoretical background to the module, this here is the most important topic. It may not look so because usually at this level, you don't always expect to receive a question specifically on direct and indirect costing. But this topic is very important across the syllabus. So whenever you write an exam, even if the question does not have a direct costing or indirect costing statement to ask you, right? However, the same principles that you'll be using here will be there in other topics. So this here is the most important topic in the syllabus. You need to be clear on this one. Right, so what we'll do is we have done an hour and a half. Right, let's take a 5-minute break, smoke break. When we come back, we then do another 1 hour, 30 minutes on direct and indirect, and we'll do a question here as well. So 5 minutes, let's come back at 10:15. And then yeah, let's make it 10, 15, and then we do the direct and indirect costing. Thank you.